All right, guys, welcome back to the channel. This is going to be the weekly analysis video beginning today, Sunday, September the 7th, running until Friday, September 12th. So before we begin, let's just pray. God, thank you again for another opportunity to trade, another opportunity to just review concepts for the charts and to help us to be successful with anyone watching this video. May it help them to be successful and may we all achieve our goals together. We thank you and we love you. All right, guys. Those of you who have not had a chance to see the video for last week. The review video has been posted. It's on the YouTube channel at Auber Strategies. Excuse me. And you'll have a chance to see how the analysis played out with what actually traded on the NASDAQ 100 last week. All right, so this week, as you will see, I currently have my charts marked up already for this current week. This is what happened last week. These were all the available moves based on the Auber strategy last week. As you know, I probably only took 2 trades last week. I exited on my last day profit, I think, on Wednesday or Thursday, I believe. And I'm still waiting for another entry. That entry actually came on Friday, where I actually got into the market and I held the trade over the weekend. All right, so let's just talk about what's going on for the week, and let's just deal with the elephant in the room. I saw a number of comments on the Minds post, and I'll just try to bring this up on my feed right now so I can show it to you. A number of people have been saying and have been looking forward and expecting the market to actually continue selling this week. Okay, guys, let me be categorically and emphatically clear to you. If you're looking for the NASDAQ 100 to sell on a long-term basis, you're fighting a losing cause. Okay, the NASDAQ 100 is a historically bullish instrument, and it will always be that way unless the world ends. Okay? Take it from me that I said it to you today, and I make absolutely no apologies for saying that. Okay? So those of you who actually were in sales on Friday and still expecting that the market is going to be selling long term, I'm sorry for you because you are going to get your accounts blown. Okay? Now, now, I actually saw a comment on here. Price is going to take out Tokyo's lower low. Not sure what that means. Simba. Really not sure what that means, but I can tell you this much: the market is not making lower lows, lower highs, lower lows. Okay, that may be so. That may have been so up until Tuesday of last week on the 1 hour time frame. However, since Tuesday, the market actually started its buying and broke structure on I think on Thursday, I believe. Let's pull up the 1 hour time frame. This was Tuesday, Monday, Tuesday. Okay. The structure was actually broken again on Wednesday on the 1 hour time frame. And since then, the market has actually started to make higher lows, higher highs on the 1 hour time frame. So I'm not sure what we mean when you say it's going to take out Tokyo's lower lows. But guys, if you are in sales, if you are expecting this market to continue selling, I am very, very, very sorry for you because that's not going to happen. All right. Now let's go back to this week's analysis real quick. Now, what you will notice for this week is that on Friday, the market actually sold. It sold very hard, very fast for about 3 hours. Okay, so beginning at 9 a.m. all the way until 11 a.m., the market actually sold hard and fast. It was actually a retracement. How do I know it was a retracement? Because it only registered a higher low on the 2 hour time frame. The one on the 2 hour time frame registered higher lows. Okay. Now remember, if you really want to see what the market is doing and what is going to continue doing, you always want to look, pick your largest time frame, okay, that is in trend, and then look at your last 2 points, okay? So let's take, for example, let's start, you always want to start with your biggest time frame. So let's look at the monthly, okay? Let me just take these lines off so you can see and zoom this down so you can see on the monthly. Okay, look at your last 2 points and you'll understand what trend the market is in. So not counting the current point, count your last 2 points. And your last 2 points say higher low, higher high. Okay, that alone tells you guys that this market is 100% bullish, which means if you're looking to sell the market, it's not going to happen on a long-term basis. It's only going to be temporary. Okay. So if you take a sell, I mean, just do an analysis. If you take a sell, okay, um, and you notice that it's sold hard and fast for 3 hours, and then all of a sudden it starts to move towards the upside. That tells you that the market found support at the last higher low, and now it's going to continue the trend of making a higher high. Okay. Now, for some people who always seem to want to be taking sell, here's why that makes no sense, guys. Okay. Now, I'm sure most of you who are trading out there do not even make 100% in your account every month. Do not. Okay. And I will guarantee you that if you, let's say, for example, last week, and don't take my word for it, go back and look at every single trade from last week. If you only took your higher low points to your highs, okay, for last week, you'd have made over 1100% on your account just by taking the buys. So why do I need to take a sell when no institution on earth right now is offering me 1100% on my account, even within the year? It makes absolutely no sense. So for you guys who constantly want to sell the market, here's the data for you. I mean, it's not hidden. This was the highest point on Monday. It came down to the lowest point on Tuesday. Measure those pips. Those pips are about 5,000 pips in that move. You took the sell all the way from the top, assuming. And I know some people took the sells and they were successful. However, that's not the point. The point that I'm making is that whenever you sell, a lot of times people actually get caught up, emotionally caught up in their sells, and as such, they get trapped. So here we go. This is the first part of how to catch a bear. Market sells, goes to a lower low. They're like, yes, the market is in fact making lower highs to lower lows. And that is true, but only on the 1 hour time frame. Okay. Then it came up, it made another lower high. You're like, oh, yes, it's going to continue selling. And so you enter the sell, and you got this big sell right here. Now, your emotions are so caught up in the sell that you're ignoring the fact that this lower low that was created on the 1 hour is only a higher low that was created on the 4 hour. Okay. And the higher up you go, all the way up to the 23-hour time frame, it only made a higher low. Okay. Now, there's also another comment that I saw last week, and this just shows that you're reading the charts, but you're still missing an element that helps you to analyze properly. Somebody actually commented that the daily actually put on a lower high for the first time in a long time. Okay, well, let's look at that more closely. Is the market making lower highs to lower lows? Is the market making lower highs to lower lows? There's nowhere on the daily that shows you in the past month that this market is making lower highs, lower lows. The last time the market made a lower high to a lower low on the daily was back in April of this year. And notice what it did after the lower low was completed. It shot right up and it created a series of all-time highs. Now, this lower high that was created, okay, take a look at your 23 hour. That lower high is actually a higher high on your 23 hour. So which tells you that in order to create that lower high on your daily, the 23 hour actually broke the structure, the current retracement structure that was in, the current consolidation structure that was in to form a new higher high. And if this is a higher high, the higher high is actually going to go back to where it was previously, which is this all-time high right here. So again, the important thing that you want to pay attention to, guys, is that you are not reading the charts backwards. Remember, you are not trading for your lows. You are trading for your higher lows to your higher highs because that's the trend that the market is in. All right. So let me go back to the analysis for this week. All right. So what am I seeing for this week? Well, basically, I will tell you, there's actually no sales on this market right now. There are no sales on this market. Okay. This is where the gate was closed on Tuesday last week. That gate has been shut. All the bears have been trapped from here to here. This is the trap. Okay. And this is actually the break point. And this is actually the first lock that was installed on that bear trap gate. This here is a second trap that was installed on that bear trap gate. And this is the third lock that has been installed on Friday. So I will tell you, do not expect to see this price coming back down here anytime soon. The market is in fact making higher lows to higher highs. Okay. The other thing that I want to point out to you guys, and I want you guys to understand this, is that the sells on the market are only valid after the highs have been completed. So there are going to be no sells, no heavy retracements on this market until all the bulls have eaten it. All the all-time highs have been taken out. Okay, there's going to be no more significant sells. Okay, bears only eat after bulls have been fed. Just remember that. Bears only eat after the bulls have been fed. Okay, and I will tell you this much right here. So look at it. This was your all-time high. Okay, notice this bearish wave. Okay, but it only created a higher low on a larger time frame. This was on your daily. Okay, then of course you notice it came up, ended with another higher high, although it was lower than the previous all-time high. It's fine. It's a higher high. Okay, then you have another retracement, but it only came to the previous level. Okay, and if you really want to do it microscopically, you'll understand that it's still a higher low because look at this point right here. This point right here was actually 22,970. That was the higher low that was created on the daily back in the 20th of October. Okay, 20th of October. Let's look at it. Let's look at the daily. Let's look at the daily on the 20th of October. Let's big it up. Just blow it up so you can see it. Sorry, the Jamaican came out in me. Big it up. All right, here we go. 20th of August. I'm sorry. 20th of August. This was the higher low on the daily. Going back, let's switch it over again so you'll see exactly what I'm talking about. This was it right here. 20th of August. Okay. Now I want you to pay attention. Okay. And this is analysis, microscopic analysis. This was your higher low line right here on your daily. That was the lowest point that was created. Okay. And the lowest point was at 22,970. Okay. Now notice what the market did. From that point on, it continued up. Okay. Continued up. Now, when the market actually created that higher high, This was on October 28th. Notice it sold again. However, this time when it came down, it did not go to 22,970. It came very close. It only stopped right here. It only stopped at 22,979.2. So zooming out, how does that look? Okay, so let's zoom out and let's look at that on the bigger time frame. When in doubt, always zoom out. That point that was created at higher low was only a higher low on your 23-hour time frame, which was created last week Tuesday. So remember, we're coming here from August 19, thereabout. Yeah, that's where we're coming from. Okay. And then we're coming here to September 1. And you only have a higher low on your 23-hour time frame. So the market is in fact making higher lows because this higher low was not broken. So respect to this point, it came right back down to your entry. But even if you came in here on this entry and says, okay, fine, I'm entering for a swing trade and everything like that. And then you had one whole week where the market went up and it did not take a profit and it came all the way back down. Guess what? It only came right back down to your entry. So you would still be in profit. You still would not have lost. And then look at what happened. It moved from here and it went up and created a higher high on your 23-hour time frame. Ended right here. So you now would have still been in profit. That's the beauty of swing trading. When you understand swing trading only works when you go in the direction of the trend. And the trend on the NASDAQ 100 forever has been higher lows to higher highs. If you really want confirmation of that, again, zoom out, go to your monthly time frame, and look at what the monthly has been making since NASDAQ has been tracked on any of the major exchanges. I use the 100. So of course, everything here is higher lows, higher highs. Every single thing. There's nothing on the NASDAQ chart on the monthly that shows you that this chart was ever at any point making a lower high to a lower low. If you see a lower high to a lower low on the NASDAQ 100, it simply means that you're not on your largest time. And you need to get off the time frame that you're on and move to a larger time frame and let that be the basis of your analysis. All right. So now that we got that out of the way, let's go back to what I'm expecting for this week. So, of course, I am expecting the market to actually continue. Now, I just want to show another thing for clarity. I want to show another thing for clarity. Okay. Now, for clarity, here is what we're going to do. I'm going to pull up. My prediction. Excuse me. My predictions chart for that I posted at the end of 2024. So let me just pull that up for you so you can actually see. I gave you 5 take profit points that I'm expecting to see in 2025. So far, 4 of them have been hit already. The last one, I'm expecting to hit before the end of this year. Okay, so let me just pull my chart up just so you can have it for reference. So that layout was actually called 2025 TP projection. 2025 TP projection. Okay, here we go. I posted this chart way back in December 31st, I believe, of 2024. Okay, here are my TP points. There's 1, 2, 3, 4, and 5. Okay, as you see, the price has broken every single one of these. Now, of course, most of you are going to look and say, oh, no, the price did not. The price went down. Guess what? Like I told you guys, when the market is selling, I don't sell. I wait. I wait for my support. This support came in April. Look at what happened since April. I'm going to zoom this out so you can see it. It found support right here in April. And since then, the market has been making higher lows, higher highs. Now, we have taken out 1, 2, 3, 4 TP levels. Okay. The all-time high, which is here, is going to be broken. And once it breaks it, the next TP profit, the next TP level is going to be here at 24,368.9. And I'm guaranteeing that, and I make no apologies for saying that, the market will break that take profit level in short order. Every single high that the NASDAQ 100 has made has been broken and will be broken. So I just wanted to pull that up. Now, I'm going to tell you this much. Currently, I don't charge for anything that I do. All of this is free information that I'm putting out there. But I will tell you this much. Based on the knowledge that I've gained over the years, studying and everything like that, I will tell you this much. I'm not giving away my information for free. I used to offer free tutoring, and what people used to do was that they would take my information, misconstrue it, misapply it, and then says my strategy doesn't work. But I'll tell you this much, I guarantee I know that my strategy works. And I make no apologies. You can call me cocky, whatever it is that you want to call me, but I'm confident that the Auber strategy works because I've spent the time over 4 years perfecting this strategy and I know it works. Higher lows to higher highs, guaranteed. And anybody who's trying to tell you that you can go in a sell and hold it forever, absolute garbage. Absolute garbage. That's the biggest lie anybody could tell you. Sell that the NASDAQ does is only a temporary retracement to create a higher low on your largest time frame. The problem is most people enter your buys at a wrong point. And two, the second reason is that most people over leverage on their buys. So whenever the market retraces, they're unable to withstand the retracement. And as soon as their account gets taken out, the market turns around and continues to buy. So my advice to you is to actually start with a demo, create the market, understand where your limits are, understand where your lot size limits are, make adjustments, journal your trades, go back and review your trades every single week, every day to look at, okay, fine. Did I go in too early here? Did I get more retracement here than I needed to have absorbed? And then you make adjustments. Instead of entering at this point, wait a little longer before you enter again. Okay, that's how you make adjustments. Now, I'll tell you this much. Most of you on here who are watching this video, really don't spend a lot of time doing the analysis that's needed. Every single week I come, right? I draw a new set of charts every single week without fail. I do my analysis from scratch every single week. Never fails. Every single week, I review all my trades. I review every single trade that I missed, and I look for what it is that I didn't see in terms of the clues that allowed me to actually go into the trade at the right time. And that's why I make adjustments. Even when I'm trading my live account, I always have a demo account that I'm running, and that's the account that I practice on. If I'm not sure about the setup and I see something that I want to practice and I want to actually test, I test it on my demo account, not my live account. So at this point in time, I do not even entertain anybody who's trying to tell me anything about my strategy because really and truly, you have absolutely nothing to tell me right now. Because I've tried it, I've tested it, and I've proven it. And until you can show me something that will give me more earnings than what I'm currently making with my strategy, I'm sorry, I have nothing to say to you. You can watch my videos, you can feel free to use whatever it is that you want to use out there, but I'm done engaging with you. I'm literally done engaging with you. And the best thing that trading view has ever done was block me from mine. I tried to get back on it just because I had some people who had sent me personal messages, saying that they like my analysis and they would like for me to actually continue. But guess what? I've had other platforms that I use. I now use Instagram, which is Auber Strategies. That's one Instagram, and I have another one that is Chris with a Kris, Chris Auber. So any one of those Instagram platforms, you'll actually see some of my daily postings, and I only do them when I have time. So guys, don't expect me to be doing this every single day, because I also have other things that I do. I have a life that I do. I do this out of love whenever I have the time to do it. Okay. So, but the concepts are there, and I've posted a number of videos on my YouTube page that you can actually watch. Feel free to watch, share, like, subscribe, do whatever it is that you want to do. Reach out to me if you have questions and everything like that. But guys, please understand that if you come and try to correct me on my strategy, I'm not going to entertain it. You can ask me a question about what I do, and whatever it is that you want to do, that's all up to you. But I really don't care what you do. I do not care for your opinions on my strategy, and I'm being very frank. I do not care for your strategy because I know my strategy works. Okay, so if you would like to use my strategy and you have a question about my strategy, that I'll entertain, but I don't care for your opinions. All right, so let's just finalize this thing. That was just me ranting for this week. But going back, I wanted to show you something real quickly. As you look at your 2 hour time frame, you'll notice that I had drawn a channel based on my lows, and based on my highs. Okay, and as such, we had a channel that the market was respecting. Now you notice that you had some lower level consolidation, okay, between your last highs and your lows. Okay, you had some lower level consolidation. And as a result of that, the market actually broke last week temporarily. Okay. However, what you would have noticed was that on Friday, the market actually broke back on this lower trend line, and it's still doing consolidation. It closed just below the lower levels. Now you'll notice that I have another trend line that I drew here. And this is what is known as an expansion trend line. And that trend line actually started from my second touch, my second validation point on my original trend line. And what it did was that it captured the lower low that was created on my 1 hour time frame. All right, there it is. That's the lower low that was created on my 1 hour time frame. Now, lower low points are extension points. They are not the trend points for a support. I know it might be a little bit confusing and everything like that. Remember, the trends are the highs and the lows. Anything outside of that, okay? Anything outside of that are the confirmations and the expansions to your trend. So remember, your trend starts with a high or with a low. Anything after those highs and those lows are what constitute the continuation of a trend. Okay, so let's look at that. So if you're on the 1 hour, okay, this was my trend right here. This was my trend right here. Okay, anything below this is an expansion to that trend. So of course, you got expansion to the lower low. But look at what happened. Market came right back up and it broke and it made a new trend. It made a new high, which tells you that the trend has been broken back to the upside. So you had a low break, so you had higher high to low, and you had lower high to lower low, lower high to lower low. Okay, that's a downtrend. That's okay. However, look at what happened. After it created that lower low, it moved from this lower low straight back to a high, which tells you that the trend has now been broken towards the upside. Now you have higher lows to higher lows to higher highs. Then you finish the week with another higher. So that is why I'm telling you with confidence that this market is not selling. So if you are sitting on waiting on a sell and waiting for the market to break to lower lows, good luck with that, because this market is going to continue up. Now let's look at TP levels. Of course, one of the first TP levels is going to be the previous all-time high, which is at 23,986. Okay, that's a good TP because I can tell you, moving from where the price is right now to this all-time high right here, it's going to be over 3,400 pips. You'll know that I only need 2,500 pips in order to break my trend. I'm sorry, to break my 100% mark. So once it comes here, that's well over 100% on my account in that one trade. Okay. Um, so of course, I have several different options for TP levels. I have Friday's high for a TP level. I have the next all-time high for a TP level. Then I have this 110% mark for another TP level. Then I have 161% for a TP level. And then after 161%, and I have 261%. These are the expansion levels of my trend. Now, this is in line with the upper trend line. Of course, if the market keeps breaking higher lows to higher highs, at some point in time, all of these levels are going to be taken. So that is what I'm expecting for this week. The market is going to continue to make higher lows to higher highs. Yes, over the past couple of weeks, we have seen some level of consolidation. However, one thing you would have noticed is that the higher lows have always been upheld. And to see that, always look at your larger time frame. So if you go to your daily, you'll see here your daily. Take these lines out. You'll see the daily is constantly making higher lows. There's nothing on the daily that says it's making lower highs to lower lows. The last lower low that the daily made was right here in April. And this higher low that was made right here was only a higher low on your monthly time frame. Right here in April. It's June into April. So right here, April 2025. That was your last higher low that was created. So the market is in fact making higher lows to higher highs. If you look at these candles, look at how they're finishing. They're all bullish candles. There's no bearish momentum right here. So anybody who's telling you that the market is going to be making lower highs to lower lows, absolute garbage. Until you have a new all-time high, you're not going to be looking to see any significant kind of retrace. Let's look at your month. Last time the month made a higher high, it broke a previous higher high, it continued, and let's just measure it so you can see. Last time it broke a higher high, it continued all the way up for 54,000 pips until the last higher low before you had another significant retracement. Okay, so if we're going by, and you can always look at the previous one too. When it broke this higher high, it continued up until you had a significant retracement for 70,000 pips. Guys, there is no reason for you to start thinking that this market is going to be making lower highs, lower lows. So if we're using that, and if we use that an average of the last 2 points, 70,000 pips as opposed and 50,000 pips, that's 120,000 pips in total. Divide that by 2 to get an average, you're looking at 60,000 pips. So you can literally expect that this market from this point right here is going to move up at least another 60,000 pips. You're looking at about 28,325. Let's put my lines back on. 28,325. So I'm actually expecting this market to actually continue going up to about here and beyond, at least to here. So those of you who are expecting this market to continue or to start making lower highs to lower lows, yeah, lower highs, that's right. Anybody expecting lower highs to lower highs or lower highs to lower lows is actually telling you lower highs to lower highs, because it's not going to happen. All right. So I know this video was a little bit lengthy today, but I just had to put that out there for you guys to understand what it is that we're looking at. Okay. Right now, where this market finished on Friday, you can expect that this price is going to continue going up on that bullish momentum. All right. So if you are in buys, continue to hold your buys. As long as you came in, if you actually caught this entry from here, great for you. On Friday, I will tell you, I actually went in early as usual on my trades. However, this is where I went in at this blue line right here. I'll make it bigger so you can actually see. Okay. This is where I actually went in. I'll make it bigger. That's my line right here. That's my entry line right here. Price actually came up and it finished right below my entry. All right. Looking at your half-hour time frame, price is there at your lower high. Okay. And people are like, oh, well, this is going to go down straight or low. No, it's not. It's going to continue going up. Look at your half hour, your 15 minutes. Here you go. You might be saying, well, it broke a structure right here. Yes, but this low that it created was only a higher low on your largest active time frame, which is your 2 hour, which is actually a higher low. Stop trying to do analysis on your smaller time frame and look at your largest time frame in order to make your decisions. So if you go down to your 5 minutes, you notice that on your 5 minutes, we have actually started making higher lows to higher highs. So this tells you that the market is actually going to continue going. So enough of the small time frame garbage. Here we go. Your higher low was created right here at 11 o'clock on Friday. Okay. And you have had two additional bullish candles since. That tells you that the momentum is going to continue going on. All right. One final thing. Let's look at indicators. For those of you who like to use indicators. Okay, let's look at one of the indicators that I like to use. Let's see if I find it here. So one of the indicators that I use is going to be the alligator indicator. Okay, the Williams alligator. And you can use any one of the moving average indicators. Okay, so here we go. You see here that the price actually broke and it actually went bullish. Okay, the green line, the jaws closed, it crossed over, it actually went bullish. The market is still bullish. Even with this dip on Friday, the market is still bullish. So I'm expecting this to actually continue going up with these jaws to actually extend in a wider position come next week and extending into the end of the week. All right. So let me take this off because I don't like my charts to look too messy. But hopefully this video was helpful to you guys. Hopefully you understand what it is that I'm seeing on the markets. And one other thing, I remember a couple of months ago, I mentioned the seasonal charts. I mentioned to you that once you go on your seasonals, okay, once you open up your seasonal data, which I'm doing right now, I've mentioned to you that every single time that you have seen the NASDAQ broke above the 0% line, it usually extends to the end of the year. Okay, we saw that we had that break right here in, what was this? This is in May, broke above here in May, and it has continued ever since. It is trending continuously towards the bullish. All right. So these are just some of the tools that you can actually use to see, what's going on. Your average line, your percent line. Guys, look at those things. Pay attention. Live for analysis. Spend more time analyzing charts and trying to analyze somebody else's strategy. Those of you who have done that over the years, I can tell you, every single clown who has tried to analyze my strategy and try to tear into my strategy and try to convince people that the market is going to be bearish, every single one of them, go back and check their posts. Look at where the price was when we were posting back and forth. Look at where the price was and look at where the price is today. And then you understand why I'll say to you that the price is going to be 100% bullish all time. No questions, no excuses. This market, NASDAQ 100, is 100% bullish. And anybody who is upset with me on my analysis, that's because you're selling and you're losing. And I frankly don't care because you're stupid. And really what it is, when somebody tries to tell you something, instead of trying to absorb it, what you try to do is to try and find a fault in it. So you're stupid, you're an idiot. People who learn and who are smart ask questions and make adjustments. Doing the same thing over and over and expecting a different result is insanity. You're insane, you're crazy, you're a clown, you're stupid if you're expecting this market to continue selling even after years of me posting higher lows to higher highs are guaranteed. And for those of you who tell me that nothing is guaranteed in the market, well, guess what? I posted 5 guaranteed points at the beginning of this year, and 4 of them have been hit already. You have posted no points on your low analysis. So you have nothing to show. I have something to show. The proof is in the pudding. So I'll say this in closing. The statistics say 95% of all traders who start this journey fail, between 95 to 99%. So guess what? If there are 100 people in a chat room and 95 of you call me a clown or call me a fraud or whatever it is, guess what? That's more fuel for me, because guess what? 95% of you are going to be wrong anyway. I don't care about you. I literally don't care about it. All I care about is my analysis and it being right. And as long as it's right, that's all that matters. If you choose to use my analysis, then kudos to you. If you don't, then sucks for you. But like I said to you, higher lows to higher highs are always guaranteed 100%. You want to win 100% of your trades? Start trading with the trend. Stop trying to sell a bullish market. Wait whenever the market sells, when it makes the higher low, go in and buy, and you will be in profit 100% of the time. Thank you guys again for watching. God, thank you again for your blessing. Please be with us as we trade this week. Help us to be successful in everything that we do. We pray. All right, guys, take care. Thanks for watching, and I'll see you next time.